today. And just goes to show, man, the trend is your friend. Momentum continues to favor the bulls. And my goodness, this thing just it's just a shocker how far this thing can run. Small caps doing okay here today. Dollar index, Japanese yen flat, gold and silver again muted. Not they definitely like this, but it's feeling a little Goldilocks out there. And that makes me nervous on one side of things, because again, when everything gets too good for stocks, that's where you can enter into melt up mode. But it's feeling Goldilocks. You've got inflation that, look, 3% is not 2%, and it's far away still from targets. But you know what else is what the Fed believes is high? And it doesn't matter if you agree or disagree. The Fed believes their interest rates are high, right? So if the Fed believes their interest rates are high, guess what? They can bring them down. They can bring them down because they think the labor market needs some help too. And I would tend to agree with that. But the labor market has been showing signs of cooling over the last few years. So they're going to bring the rates down to help the labor market, despite inflation still being. So basically, the Fed, what they do is they look at jobs and they look at inflation and they say, okay, which one needs more help? Whichever one needs more help, that's the one they're going to administer to. Currently, they think jobs are the bigger problem than inflation at 3%. Had we gotten a 3.2 or 3.3% inflation print, the idea is that the Fed would have to kind of redirect its attention over to inflation again. And so today, the market is celebrating the idea that, hey, we don't got to freak out about inflation for now. Anyways, guys, we're going to bring in Chris Pulver to the conversation. Before we do that, let me just remind you, if you are enjoying the show, make sure to hit the thumbs up button, subscribe. And if you want access to the Edge Finder for free right now, we are doing a free week. Like, it is straight up free. No credit card required, no nothing. You just put in your email. We will send you emails. You can always opt out of those if you don't want them. But if you are interested, here's how you can try out the Edge Finder for free all the way through next, not the full week, but for most of next week. Here's how you can do it. Join the Telegram channel. You can scan the QR code that is below my face right now. Just scan that, or click the link that's been dropped in the chat. So once you're in the Telegram channel, just click the pinned message. And then here is the information for trying out the Edge Finder for free. It's your chance. I mean, it is the full version of the product. So if you're a regular viewer, if you're like, okay, this fundamentals thing, this macro thing, he's using this tool every day. It's really awesome. You said it, not me. You think the tool is really awesome. If you want to explore it, there's your chance to do so for free. The link is in the chat. Join the Telegram, click the pinned message, and then just fill out this form. It'll send you a copy of the Edge Finder to use all the way for free until October 29th. So try it out. You got the whole weekend to play with it. Good stuff. Anyways, we'll bring in Chris Pulver here now in just a second to say hello to him and see what his thoughts are on this CPI print here, coming in softer than expected. Let's see. Here he comes. There he is. What's up, Chris?
Good morning. Happy Friday.
Happy Friday. Is it cold where you are, Chris?
Yeah, man. It's we're up at 6,000 feet, dude. It's cold. Yeah. It's cold every day if you're up that high.
I bet
no,
it is.
It's like 50s. It's fine.
Okay.
It's fall. Yeah.
Yeah. No, it was like 40 here the other day. It's cold, but yeah. Anyways, we've got our CPI print here this morning, Chris. We had obviously the softer print. Not necessarily like it's still higher than previous. That was a distinction to make. It's still going up per se. You had 2.9 previously. We got a 3% print, but we haven't had a print in a while. So, the market is definitely welcoming not the tail end risk of like a 3.3 or a 3.4 surprise.
Right.
3.1 was expected. We got 3% inflation. Seems like Fed's going to proceed with cuts. What are your thoughts on all this?
The core PC also came in softer. The core was forecasted. Previous was 3.1, I think, and it came in 3. So core actually dipped a little bit. I think a lot of this has to do with shelter. I think that shelter's been going down. That's like 40% of CPI measurements. So, the slow and steady inflation as PMIs are rising is what I've expected to see. But obviously the market's stoked about it because we're up like 0.65, 0.7%. Earnings this week have still been solid, even with a slight miss in EPS. Tesla had a pretty big day yesterday. Intel smashed earnings and was up, like almost 10% after market hours. So, look, the AI narrative stays intact. Earnings are solid. Inflation is not scary. The Fed's going to continue to look to cut to maybe help the softening labor market. It's nice to get some data, to be honest. I mean, it's been just total blackout where it's like, well, market's up, wait, market sideways. Oh, one big sell off on October 10th, market's inside of that. It's like we've been waiting to see where prices can go. And now that we're actually looking to poke, here's the deal. Can we close? Do you think we can close above today's all-time highs or close above that 60? I guess S&P would be like 67, 64 be the all-time highs. If we can close above that, then I think this is just a measured breakout move. I've already looked at this. Whether this is a broadening pattern or some type of measured diagonal, this is fine. I don't like that we're hitting some all-time highs with the 50 moving average still not hit. So, a couple of things here. I have a trade that's running. If we get up to 6,800 today, this is one level I'm watching this morning. If we get to 6,800, I actually have a calendar spread that's looking pretty good. Because I think my pin price is like 68.15, and I've got a Monday, Tuesday. So if it works today, we're up into 6,800s. That's the biggest gamma level that I see, and that is within 0.9%. We're opening like 0.7%, Nick, higher. So I would be looking if I'm going to fade today's move. I mean, usually I'm looking to sell some premium one way, shape, or form. I'm going way out of the way, just because VIX is where's VIX at? I mean, geez, man, can you see that? Like 29 VIX to 16 in the last week. In the last week, literally in the last week. That's a massive dump in volatility. But I think that's what the market needed. It was not really showing correlation. I mean, I think if somebody told you, hey, Nick, the VIX just went from 17 to 29, you'd be like, well, how far are stocks down?
Right.
Oh, they're less than 1% for the all-time highs.
Yeah. I mean, it's
really
just
weird.
crazy because we've had VIX cycles that are like way faster than usual in the last few years. I mean, usually when you get a VIX pop, like let's go back to 2022, VIX remained elevated for like, here's the VIX in 2021, 2022. You can see we'd get these pops, sure, but we would sort of like stay generally trading for a lot of the time in the 20s.
Right.
That is during obviously a down market. So during an up market, you're going to kind of expect to see lower volatility, but it's just interesting how many false starts to like, a fear event we've had. And I think some of it is just the political back and forth that's gone on. And some of it is just, bull market stuff that takes place, right? There's like a lot of the thing that's weird about and I'm to be fair, I'm one of them. When it comes to like the stock market, a lot of people are worried about like, oh, it's going to be a bubble. And I think it is a bubble, but it's a question of like how early in the bubble or how late in the bubble are we? Like AI, like any new technology, is likely to be turned into a bubble. The question is it a bubble right now that's about to pop, or is the bubble still inflating?
Yeah. Well, I think I read this morning. The one thing that does have me concerned for a bubble would be if this CapEx spending turns to debt. It's one thing if you have free cash flow. It's another thing if you're taking out debt. I just saw this morning, I think it had something to do with Oracle. Let me try to find it.
Yeah, that's a good point.
Yeah. Oracle just completed a $38 billion debt deal. So, that's the stuff that I'd be watching for. Let's see here. Finance more data centers as per Bloomberg. 23.5 billion towards the Texas center, 14.75 towards Wisconsin one. So 40 billion in debt. And granted, I mean, Oracle, they probably have the cash flow for something like that, but I don't love that. I think, spending like Facebook or Meta and Google, Microsoft, like spending % of sales, that's very different than like, let's take on more debt. Look, nobody needs to see higher debt at higher financing levels. This is one thing that we've talked about. I am watching the 10-year rates. I think by the end of this year, especially with the Fed's likely going to cut next week and again in December, if that's 75 basis points more of cuts, and yet we don't see the 10-year yield or the long end of the curve down lower and continuing to trend lower, that doesn't look good for 2026 to have like sticky refi rates, and companies are now taking out debt to join in this AI revolution. I think that's where it gets a little bit more bubbly to me.
Yeah, I agree with that. And I think that my big thing with the the AI stuff is I think genuinely that I've been saying this to you a couple different times, but I think that the biggest risk to the stock market going down is the stock market going down due to the wealth effect concept. A lot of people who are invested, who are doing well in the stock market, they feel good, and so they go out and spend. We call this the wealth effect. And so, people who have been invested in stocks, who have homes, who have real estate, who have, if the beneficiaries start to feel a pinch, I think the rest of it starts to fall down. But that's not what we see right now. And
Right.
it's frustrating to try and fight it if you are being defensive, if you're putting on hedges, if you're diversified. You're looking at it and you're like, dang, why am I just not long, TQQQ in my portfolio? But of course, we still want to be risk adverse. We want to be careful because we don't know exactly where the top is. But that's kind of exactly the point that I'm with, is like, we don't know where the top of this thing is. And when it shows up, Chris, we're here every day. The idea is to hopefully be able to kind of keep an eye on it. And it's like, if something starts to break in price action, if something starts to form, and if you start seeing significant layoffs, if you start to see the top end consumer not holding up well. But there's some stuff out there, Chris, that just keeps me from, like, I can't get outright short when American Express, the top end of the consumer, is still doing really strong despite the odds. It's like, you can fight this thing, but it's like hitting your head against the wall.
Yeah. And I mean, the consumer, look, you've got if you've got stock holdings doing well, and you have household equity hanging in there.
Yep.
So when those two things, I mean, that's probably two of the largest contributors to where, wealth is coming, is like owning assets and, equity in your home. I think, a lot of people that have been stretched a little bit thin are tapping into home equity lines. I mean, I've got a buddy that, probably tapped into like 50K this last year at like a 4.5. And he's like, well, I'll just invest. I can make 4.5%. I'm like, you can, I just don't want to take out debt to do that. That's to me, that's almost as bad as trading on margin, which is like most brokers are charging 6, 7, 8% financing to play on margin. So it's just, I don't know. I think the consumer at some point, and maybe gets overstretched, or you tap into those two things. If the stock market, has some big volatility swings, that's going to play a psychological factor. And if somehow, the housing market just rolls over, or we see like existing home sales go down dramatically in 2026, then like you play with people's, two biggest assets. That's probably going to be where things get a little bit rockier.
Like, I think that going into 2026, it's valid to be cautious in the sense that, like, okay, I know you've talked about this. You got like midterm elections coming. You've got, you've got stock valuations that are just like you are in nosebleed territory for stock valuations. Let me just show my chart.
The stock valuations plus the Buffett. I know the Buffett indicator is a little, old school, but so is Warren Buffett, and the guy's, still one of the greatest investors ever. It's like 2 to 3 standard deviations above. So we have like stock valuations, I think 211% above GDP.
Yep.
So it's way out there, man.
Here's technology stocks historically, guys. We're looking at the stock box. By the way, stock box is free to try out this week if you'd like to try it. Hold on here. We'll do this because I don't have the link in front of me. If you'd like to try the stock box, drop a message to our support team. Just let them know you want to try it out. Oh, look at that. We got it.
There's the
Telegram. Thanks, James. Okay, yeah. So check this out. PE ratios historically for XLK, that's the technology sector, are at the highest level that they have like pretty much ever been. Like you're talking about incredible. Now, here's the thing. Before you get overtly bearish because of that, you do have to be careful, because tech stocks are also putting up the most remarkable earnings they've ever done too. And so does this mean, we're at the top end, that we can't break lower? Well, I've heard this, Chris, and this to me, you have to be so careful with how you say this. I'm going to say it carefully. Is there the possibility that there is a secular uptrend in stock valuations over time due to efficiency of companies, technologies changing? What I mean by that is PE ratios 50 years ago, is it a different rule book nowadays than it was then? And I would agree, but you have to say it carefully, because it's like, that is another form of saying it's different this time. And I would be really careful saying it that way,
Yeah. And also, I mean, it's going to rhyme. I mean, I think that the negative side of what you just said is that comes to the price of hiring 0 people and probably laying off workers. And so the labor market is going to continue to look really, really crappy over the next probably several years. As companies have better margins, more profits, robust earnings. And it's like, my gosh, I can't believe how much money this thing makes. Meanwhile, they're just laying off people. But they're not needed. So, I mean, again, the trade-off is like, you can either hate the fact that AI is coming, or you could probably make a lot of money for the fact that it is coming. Companies will do really well. I think it's going to be very, very disruptive. We don't have that right now because it's still led by Mag7, which ultimately, if they're doing well, all the concentration in Mag7 will still lift the markets. But I do think there's going to be a lot of disruption. We look at the S&P 500 now. I think, Nick, you and I should like timestamp this conversation and say, okay, October 24th, 2025. Let's look in the next like 5 years. Let's go to 2030 and see like what the top 100 stocks are, what the top 10 stocks are, because they're probably going to be different.
Yeah.
And I think
like
that disruption of 500s a lot.
I think like Microsoft's the only one from like 20 years ago or 30 years that's like in the top 10 or something like that.
It did jack shit for 13 years.
Yeah, that's correct. Yes.
Yep.
And that's the thing is, the thing that we had to be careful with is, I think I had this thought. I was walking to the grocery store yesterday and I thought about it. I'm constantly thinking about trading. I know you are too, but I'm thinking about something. I was like, I was listening to a podcast and people were talking about the quantum computing stuff and how exciting that is. And I'm like,
it's Trump's next big purchase, dude.
What'd you say?
So that's Trump's next big purchase. It's like government's looking into quantum computing companies. Like,
look,
cool. What's the ETF? Let's get it. Let's get it. Let's get the grift, baby.
And I get it. And it's super innovative. But here's the thing. My thought was, I think you could do incredibly well, not financial advice. I think you could do incredibly well over time if you bought some of the most exciting, like most innovative stuff in small size without leverage. I think you could probably outperform just buying that stuff. Where people go wrong, in my opinion, this is my revelation. I realized that a lot of times retail does get it right. Retail actually finds a lot of really cool stuff before hedge funds do. But where they go wrong is they want to turn it into a bunch of money really quick. But if you just took like retail favorites, and there's ETFs for this, by the way, there's, retail favorites like meme and stuff like that. Like, I think that's a new ETF. Like, if you took some of the most excitable, innovative new things and just didn't leverage the heck out of them with options and with, borrowing on margin, things like you mentioned earlier with like your friend, like people, not in a, that's a little different with a home line of credit, but the concept of like what people tend to do, they put a bunch of leverage on cryptos. They put like if you just bought the same things without the same leverage, I wonder how well you would do in the last 5-10 years. Probably really well.
Well, yeah. And also you'd have the ability to survive the downturns, because when you're double and triple leveraged, and the market's down for a 20% correction and you're watching 60% go away, it's hard to have the emotional stability to be like, I'm going to buy more. It's like, that's where people like feel like they're losing everything when you're down, 50% and the market's barely in reality budge, but it's like, I'm triple leveraged. And I know that's an exaggeration of one thing, but we offer that. I don't know if we talked about this on air, but there's more ETFs available now than there are publicly traded companies. And also, of all of the ETFs, there's only 1% of them, of like thousands of ETFs, there's 1% of them that are leveraged. And yet 12% of daily ETF trading, 12% of all daily ETF trading is leveraged.
It's crazy.
So it's again, that's exactly what your point is a lot of people just, they use leverage, and it's a double-edged sword. And you're right. If they just traded something a little bit more standard, they probably would survive the downturns. And that way, like, point to point, tick for tick, it would match versus, if Nvidia's up 5%, I've got a triple leverage, I'm up 15%. But the way those things are priced out, if you hold those things longer term, they don't work that way. You're really going to get like a huge reset, and it's hard to just buy and hold leverage. So you have to really kind of time it. You have to be on top of that,
borrowed money.
And on top of that, you also trade options. So you're like leveraging the leverage, and it just gets silly at that point.
But I mean, it's human nature to an extent, Chris. It's like anything. If you want to get in better shape, you could work out as hard as you possibly want for a week. It's not really going to do anything. Well, I guess you could cheat with it. But here's the thing, right? If you want to get in really good shape, if you want to run a long distance, if you want to get really strong, whatever, it's a little bit at a time every day for a long time. That's what gets you there. Yep. Same thing in financial markets, leverage and all the gamified stuff. Like, people have free will. You do what you want to do. But in my opinion, if you want to be doing this like 20 years plus, like Chris has, or, almost 10 years for myself, you don't get there by taking exuberant amounts of risk, because it will get too hot in the kitchen and you will blow up. Like it's just a matter of time. really about making consistency into your trading, into your investing, and being here for the long term, because most people blow up along the way touching all that stuff. And it is tempting, man. It's like, man, why would I, like I was looking at my portfolio, Chris, and I was like, man, I'm up so far this year. I'm up 28% in my portfolio. I feel like I've had a really, really good year. And of course, the thought crosses my mind, well, if I just did 2x leverage, I'd be up 60% this year.
Yeah, or if I had a bigger position in X,
Yes.
the blah blah blah. It's like if I had a bigger position in this, if I wasn't covered on Intel at 25 and I'm up to $40 right now, I'd have $50,000 more profit. It's like, yeah, that's
But the
true.
challenge is in 2022, I had a 31 or 32% drawdown on my portfolio.
Yeah.
So if I doubled the leverage there,
Yeah.
would I be okay with 64 to 65% drawdown? Absolutely not. I got a mortgage. I don't want that kind of drawdown, right? What if it had kept going? I would have blown up. So leverage, again, my opinion, personal opinion, I stay far away from it.
Yep. No, I agree. Look, there's plenty of leverage. Look, options is leverage. I mean, you can trade, you can get more return on risk with options without ever taking bigger risk. It is cheaper to trade options than it is to buy shares.
Yep.
It's a price and time game. But you literally have every trade, if you want it to be, every trade can be defined risk, where the market can go up or down or sideways. You can still make money. There's all sorts of option strategies, and that's all it's like you're playing chess with the market when you know what the outcome can be and what the outcome should be. Like that's a pretty smart way to trade versus chasing everything and I mean, I don't know. This all reminds me, I want to check in with a buddy of mine that he's made like literally millions of dollars. I think this was back in like 2020, 2021. He was up about $4.5 to $5 million in his personal accounts with penny stocks. That's what he's done for like the last 7-8 years. But since 2021's top in November, since 2022's decline, he still has not recovered. He was up like $4.5 million and it dropped. I think he's maybe sitting on under $1 million right now in capital. So he's still got trading capital, but man, I mean, I would not have fun being up to $4+ million, not preserving that, not making even a safer, 5 to 8 to 10% of that with lower risk. That's still like you're surviving quite well if you're at that point. But
do you know the Doge millionaire guy? Did you hear that story in 2021?
Where's he at now? I mean, I know he was up. He had 100. It was something like $100 and some thousand of like friends and family's money, right? He had it up to several million. I know it was like
the dude like maxed out credit cards, borrowed a bunch of money, went from
Andrew Jick and
Stephen Graham Stephan.
Graham Stephan. Yeah, they both were like in person. Hey man, like let's and he didn't. And so I know it was.
So your story resonated right there because you said the same thing. It's like, dude, when you've made, if you have that kind of like, if you come into that's
life-changing money, dude. If you work with it, it's life-changing money. Like
like sometimes Chris, people are like, Nick, why don't you go for much bigger returns? And I'm like, look, I am blessed and very grateful to have gotten into a situation where I don't need to take that risk anymore.
Let me show you something.
Yeah.
Okay. I told my fiance last night, we picked up some Halloween costumes. We were coming home. And I was like, look, if I'm sitting at like $2.5 to $3 million of my own, obviously this is a little bit interest rate sensitive. And I'm not going bonds. Don't worry. I'm not going like boring. I'm not going bonds. I will show you a trade right here. That if I'm at that level, this is what I'm doing in the S&P. Here is a trade. I'm going to go to the options chain. I can do this 12 months. And let's say that I put in, I'll just say $2.5 million. Okay. So I'm going to go out to December 31st of 2026. I'll go out roughly a year. Let's go December 18th, 2026. We're trading right now around 67. I know this is gonna bump up here during opening bell, but I'm gonna go 67. And let's go 67 by 68 and 68 by 67. This is my buying power. There is a max loss of 0. Okay. So what this is this trade is a $100 credit that trades for a 95.80 debit. So what I have every single 12 months here is I have a 4.2% winner.
Yep.
So if I'm at $2.5 million, okay, times 0.42, and that's I guess it's like 4.4 right now. Okay. I mean, if I had no debt and I could invest this much capital, I know it's not sexy. but a 4.5% risk-free, literally risk-free, to make 6 figures a year, that's what I would do. With limited debt, expenses are paid for. I'm hoping I could live within the means of, $50,000 a year, $60,000 a year as far as fixed expenses. But you can make 6 figures every single year, and it's guaranteed. Like, you don't get a lot of trades like that. So it doesn't have to be super risky. And it's like, at that point, I don't want to be risky. At that point, it's like, I'm happy with like 5 to 10% a year. You should be happy,
Now, Chris, to counteract that, because obviously I know, like, that is the dream scenario for probably everyone listening. Here's the thing. If you are not there yet, though, don't screw your path up by going the opposite extreme. Because here's the thing, right? Like, if you're saying, okay, well, I'm not at that point, I need to get there, so I need to obviously take a lot of risk in order to get up to that point. Don't do that, because I'm telling you, obviously you do what you want. I'm not a financial advisor. I'm just a guy on YouTube. But here's the thing. If you try to go too aggressive and try and, I'm going to risk high and then I'm going to do low risk, that model doesn't work. You have to, now you can go moderate risk to low risk later, but high risk I've never seen work for anyone. Like, long term, you try and go big. Again, it's what we were talking about a second ago with leverage and all that stuff. Like, that's going to blow you up along the way. So, a lot of people out there trading gold right now, if you are having, crazy equity swings in your portfolio, it's probably not going to end well. But if these moves are not killing you or scaring you, then you're probably okay. So that has a lot to do with your position sizing. If you're trading on a CFD brokerage, my personal opinion, even with a 0.01 lot size on gold, I know a lot of Forex traders or international CFD traders, 0.01, I still think you probably have to have like 10 grand plus in an account if you want to really moderate your risk. 0.01 on a $500 account is way too big for gold. So, I would encourage everyone, take some time this weekend, evaluate your risk management and really dig into it, because it is the only thing that keeps you in the game long term.
Yeah. And I will say the magic number for me in my career was the first 6 figures. When I got to 100 grand, that kind of changed the way that I traded, where, I was very aggressive in like the $2,000 to $5,000 starting points. I was very aggressive even into the 25Ks. When I took 25K up over 140, 150K in like a year and a half, once I got to that point, it became more of like, okay, don't give this back. Now let's go to, can I do 10, 15, 20% on this? And I started looking at compound calculators. I started looking at how I can do this safely with way less risk. I certainly started trading smaller, by this time, and Nick, you know him well, but Rob Booker preaching for a long time about trading small. It's like, I went from, trading,
changed my life,
standard lots on 20, 25K accounts and doing really, really well. But I will admit that at that time, for that like 1.5 years, it was totally lightning in a bottle, because it was the perfect strategy for the perfect time. I made a lot of money. And then what really opened my eyes was, I was up to about $100 and some $1,000. I got into a $30,000 drawdown, doing the same thing I had been doing, making all this money. And that was the first reality of like, okay, so there is not this perfect, this isn't like a perfect forever strategy. This is like, oh my gosh, what got me here also has risk. And so
if your account can gain a lot of value really quick, it can also lose it just as quick. So you got to be real careful about how fast stuff is moving. So totally true. And again, I've learned those same lessons. And as you mentioned, like, Rob Booker was life-changing for me, because it was really learning to embrace, slow and steady survives. Everything else doesn't. And, it can work to go higher risk. And I'm not saying you can't grow accounts quicker, but you're accepting the outcome potential of blowing up money. So that's what happens when you take higher risk and get bigger returns, is your risk of ruin goes up inevitably. It's just the calculation of the markets.
Chris, I know we have to go. I just want to say one quick thing on, look, you and I are talking right now, late 2025. We've got our November 17th session coming up. What happened to a lot of traders back in 2022 is going to happen again. Like, Nick, you and I will still be here. We'll still be talking. That survivability is really important. So look, a lot of people are making a lot of money, and that's awesome. And I'm excited for the future, whatever it looks like. We should be embracing the fact that the markets are a challenge, and it's my favorite puzzle. It can be wild and crazy and stressful at times, but if you can give yourself a horizon, it's not about timing, it's about time in.
Yes.
Right. So let's give ourselves another 3, 5, 10 years and do it the right way. It's like, I think that, I don't know, it's tortoise in the hare. I don't mind being the tortoise. I've been doing it for 25 years, and I'm doing okay.
And you know what? You're still here because a lot of people, I mean, in my 10 years of doing this, I have seen so many people come and go. I cannot imagine with 20 years. Look, I resonate with Chris to the utmost extreme when it comes to you guys who are in the audience. Look, I'm going to be so blatant with you. A lot of people who are here right now are not going to be trading in a year. A lot of people are definitely not going to be trading in 2 years from now. But some of you guys, some of you will go the distance. And some of you will still be tuning into streams and hanging out with Chris and I 5 years from now. Let's hope it's happening. I mean, God forbid, you know, we're still here doing our thing and doing it each day. But the way you stay in the game is risk small so you don't blow up along the way. Chris, we're out of time. Again, great stuff here today. Thanks for coming on. And we're going to throw over the stream to Marco in just a second. And last thing I'll say, remember, guys, we're doing Edge Finder free week. Same with Stockbox. If you want to try out our stuff, it is free to use in our Telegram channel. Again, link is above me right here. Just scan the QR code, or we'll drop the link here in the chat. Once you're on the Telegram, just click the pinned message, grab a free week of Edge Finder and explore it to your heart's content over the weekend. With that said, Chris, thanks for coming on, man. See you.
For sure. Have a good weekend. Thanks.
You too. Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone, welcome to my segment of the stream. So I hope everyone is doing well. We had some data. First data out of the United States in a while. So we have had pretty much a blackout, a US government shutdown. So let's take a look. It was the CPI print right here, USD core CPI, and it came in actually lower than the forecast, but on the year-on-year, we came in higher than the previous number. And the core CPI month-on-month came in lower than the previous number. So you could say kind of a result that is, I would say, a bit mixed, but essentially it should be a bit bearish for the dollar. And it is not what I had in mind. So it's not according to my forecasted sort of outcome. I thought the core CPI is going to come out at, let's say, 0.4% possibly, and that the CPI will be maybe 3.1%, maybe even 3.2%. So if you look at the current trend, it is still to the upside. So we're now at 3%. It is rising still, even with the miss on the numbers, miss on the forecast, we are still rising in inflation, which could be a bit problematic. So not as bad as I anticipated, but could be a bit problematic for the Fed. Now, do I think that the Fed is going to change their decision? I don't think so. So we can look at the Fed watch tool and see what is priced into the markets. So for the 29th of October, pretty much guaranteed a rate cut. December, actually, let me check. Yeah, December, pretty much a guarantee of another rate cut, like 96.5% that we will have another 25 basis point cut. So essentially with the rate cut story, not much has changed. The reaction on the dollar, I do have a UJ buy, which did lose some value. It's still running in some profit, but it has lost a bit of value. USD CAD is around break even. I have 2 positions in, and it has retraced a little bit, but still around break even on, if you, let's say, add up these 2 positions. Euro CAD is actually back into profit. So Euro CAD is sort of a long-term position I have. I plan on holding this for maybe the next 2 to 3 months, probably for the whole 2025. And just because of the CAD weakness, We have this trend line. It's being respected. We're slowly grinding higher, battling it out around break even. But overall, my bet is that this will continue going to the upside. DXY, we can take a look at the DXY, which is down on the day. So we were in a bullish, sort of a bullish candle, but now it has become a red candle. So my personal forecast for the US dollar is more upside. I do still think more upside will happen. What we have at the end of the month, we have corporate buying of US dollars. So again, big US companies, Apple, Amazon, Microsoft, Nvidia, do business from all over the world. They collect foreign currencies and then they exchange foreign currencies for US dollars, usually at the end of the month. Okay. Usually at the end of the month, that makes the US dollar appreciate in the last few days of the month. One more thing, you have the Santa rally up and coming. If you check the seasonality of the S&P, the monthly, so S&P, usually November and December are really bullish. So you have Black Friday, you have Christmas, you have gift buying, you have a lot of spending, you have the portfolio managers trying to squeeze out the most to their returns, so they buy stocks like crazy. Essentially, what do you need to buy US stocks? You need US dollars. So as US stocks go up, USD gains value. You can look at USD JPY. See? So October and November are usually positive. You can look at USD CAD, which are both of my positions. October, November, December, usually positive. Look at this massive push to the upside at the end of the year. So that is what I'm betting on. I'm betting on continued dollar strength. I think we can hit, let's say 100 level, maybe. I think we can hit this swing high. I think that is achievable. Above that, not exactly sure, but I do think we have found the bottom overall in 2025. So I do think the bottom is in. What was pretty cool is the bottom was in right after the Fed meeting where the Fed announced rate cuts, but they were hawkish. They were sort of concerned about inflation, which made the DXY actually go up. Tariffs are no longer present in the news. Trump has already made most of the damage that he could, so the USD has already heavily sold off. I think it's time for us to go up. The fundamentals are pointing to a higher dollar. US is doing okay in terms of the numbers. So we can look at the US economic heat map right here, and it's okay. So for stocks, very good. 67% of the data is coming out better than expected. So that is nice. You have rate cuts, good for stocks. For the dollar, I think rate cuts are mostly priced in. So even though we know 2 rate cuts are probably going to come, I think that they have mostly been priced in. I think people are not going to sell more dollars on the news of rate cuts. And I think, as I mentioned, the bottom is in for the DXY. I know Ballout would not agree, but that's why you have the market. Some people think DXY goes up. Some people think DXY goes down. If everyone was long or if everyone was short, you would not have a market. That's what creates a market. Contrasting opinions. Other than that, let's see the Nasdaq. So the Nasdaq is actually flying higher, all-time highs. S&P, all-time highs as well. We're just continuing to go higher. Gold, what is gold doing? So gold is actually just stagnating a bit, pulling back. Silver, also stagnating a bit. Let's see. Crypto, so Bitcoin, Ethereum. Bitcoin looks a bit flat right here. I mean, we're kind of on the bottom of the range. Would I look for buy setups on Bitcoin? I personally would not. I'm looking for Bitcoin to go into the all-time highs, and then I would consider getting in on some buy setups. That is the game plan for crypto. Ethereum is also looking pretty flat, and it's kind of lost the momentum right here in this area. that's about it for the quick watch list scan. Now, let me mention the sponsor of today's video, which is DNA Funded. Okay, so if you guys are looking for a reliable prop firm to expand your trading capital, we have a 25% off discount code for you. Okay, this is our partner, this is our channel sponsor, and with the code A1Live, you can get 25% off any of the challenges on DNA. Now, why do I recommend DNA? Because it is one of the few reliable prop firms ran by professionals, ran by a very well-known broker, and you get a really good competitive price with our discount code. That's what creates a good offer. This is my 50K account where I test ChatGPT trade signals. Currently, the equity is just around break even. I have 2 trades running on the S&P, on the Aussie dollar. Both are in profit. So essentially, this recent push on the S&P is benefiting my experiment, you can say, my ChatGPT experiment. We will see how it goes. Right now, we're battling it out around break even. Kind of sad to see that, but maybe we will get an uptrend or a downtrend in the equity in the future. So DNA, 25% off, A1Live, check it out. Now let me check out the comments. So let's see. Let me scroll all the way to the top. Who's trading gold right now? I'm looking for pullbacks on gold. What's the best broker for investment? If you want to get recommendations about brokers, you can go to A1 Trading. And on the website, we have all of the brokers that we recommend. So A1 Trading, visit the website, and there you will have the brokers. You have to understand something. Inflation is still a problem. They only lowered for Trump. Maybe, but inflation is still a big problem. So inflation is still 3% and it's rising. At least the CPI is rising. Maybe not the core print. The core one would be the core CPI month on month. That one is kind of lower. We can look at the data, I think, here. Yeah, so that one seems to be possibly on a bit of a downtrend overall. I wouldn't say so, but the main one that I'm personally watching is the year-on-year CPI that you have in the Edge Finder. So that is the one I'm personally watching. It's elevated, which is a bit of a problem. Okay, just a second. Don't worry, Marco. News doesn't move the market. People move the markets. Yeah, but people react off of news. So essentially, I would say news does move the markets. DXY is still going to fall. We'll have to see that. So what we say, DXY is currently negative on the day. So there's a friendly competition between Ballout and me. Today, we were supposed to get the results. I think it's going to go to at least 99, let's say, or close to 199.9. Ballout says, I think, 95. So if you want to watch how it develops, join the A1 Trading Discord and you will see. When the New York opens, DXY will show its true colors, possibly. So the New York Open is, I think, in 45 minutes. So we will see what will happen. I'm with you on the dollar falling, but don't you remind me of the Maya talking about the end of the world. Okay. He already said not going as he said it was going to go. Good enough for me. Much respect to Marco, real one. Yeah, so I was not right on my prediction. My forecast was for a hot CPI print. That unfortunately didn't happen. Well, maybe fortunately for people that are selling the DXY, but unfortunately for me, the forecast didn't happen. So we got a sort of a miss in the CPI print. But I still think the overall story is bullish. Is bullish for the DXY. Marco, didn't you see the recent CAD news and Edge Finder score? EuroCAD is bearish. I have to stop selling CAD. I would say most recent news So most recent news out of Canada is pretty good. 75% of the data is coming out bullish for the Canadian dollar, but I think long term it is pretty bad. So long term, the housing is still in the dumps. The GDP is all over the place. The worst thing though is the unemployment. Okay. So the unemployment, 7.1%, higher than in any other country. It's in an uptrend. Inflation is up as well. Inflation is above target. Inflation is, I think, 2.4%. What is that called? That is stagflation. So it might look like the CAD is doing well in the short term, but in the long term, I think it's still a good sell. I think it's still pretty bearish. And I mean, USD CAD, it's not really moving down, is it? I mean, I would say it's in a pretty good uptrend. So I would say this still looks pretty healthy to buy USD CAD. And Euro CAD, I would say it's still also in a nice uptrend, still looks healthy overall. That's at least what I'm seeing. Okay, let's see. Gold. Hey Sluggy, what's up? Next week rate cut is going to spike down and then hawkish Powell. Yeah, so basically what can happen next week is you can have a hawkish Powell. They make a cut, but it's going to be, it could be a hawkish cut. That's what happened on the 17th of September. You got a rate cut, but Powell was hawkish. He was kind of concerned about inflation. What happened? We actually went up. So we had a rate cut, but the DXY went up. That's just how it goes. And again, CPI slowly grinding higher in the United States, which in my opinion is a bit problematic. I'm sure Powell will comment on it. It'll be interesting to see. So if you guys don't know, next week we have the Bank of Japan. I don't think they're going to hike interest rates. A lot of people are expecting them to possibly hike interest rates. I don't think that's going to happen. I think there's a clash between the new prime minister and the Bank of Japan. I think they're going to keep rates the same. And you have, is it next week though? Yeah, it is. So next week on Wednesday, on the 29th of October, you have the Fed funds rate, FOMC statement, FOMC press conference. So watch out what happens at the press conference, because they may produce a cut, but in the press conference, they may go hawkish. So Powell may mention inflation as being an issue. Okay, gold. Let's see, that there's quite a lot of comments. I'll just quickly scroll through. Euro Swiss, we can pull up. Let's see, Euro Swiss is actually kind of bouncing off of the level. So that's interesting. What I was talking about, it wasn't really a trade idea. It was just an interesting concept. Basically, this was a nice area where we could have looked for a bounce, because this is possibly the area where the Swiss central bank will do an intervention, because they want to keep the Swiss, let's say, weaker, so that a Rolex watch is cheaper for foreigners to buy. Okay, Swiss cheese is cheaper for foreigners to buy, so they want to keep the Swiss franc, let's say, cheaper. Yeah, you can say it, cheaper. So far, kind of working if you try to go long there. I personally would like to see a big wick into the area. So a big drop with a big wick. I think that would be interesting to see. But I don't have a clear opinion. I was talking with a Discord member in the A1 Trading Discord, and he actually had some information from the Swiss central bank, and they didn't mention an intervention at all. They didn't even mention the Euro-Swiss exchange rate. They didn't mention the 0.92 level, which could lead me to believe that they will not do an intervention, that they will just let the market fall. Okay. We will see what will happen. Interesting story, interesting to follow. Okay. Bank of Canada next week will cut interest rates. It is most likely that they will cut. Probabilities are pretty high that they will actually cut rates. Okay, let's see gold. Hey Joshua, what's up? PMI, which PMI? If you can type which exact PMI you are referring to. I'm sure we had a PMI release. Okay, manufacturing PMIs, flash services PMIs. It could be important, yes, but I would say the most important market moving event for today was the CPI print. Okay, so I don't think this is going to move the markets much. It is going to be released in a couple of minutes, but I think James is going to be with you for the PMI. So this was the big one for today. Okay, I'm sure Nick covered it. Gold. You guys want to see gold? So let's do gold. Let's do silver. For me personally, gold and silver, I'm looking for buy setups, although I'm considering waiting for a confirmation from the Edge Finder first. So gold is currently neutral. Silver is neutral as well. I am looking for pullbacks. Okay, I know we already had a pullback. It was kind of a big one as well, but I'm looking for, let's say, this level to hit, maybe this one, and I would like to get a confirmation, and I think Nick is looking for the same thing, so I would like to get a confirmation from the Edge Finder. If we can get an Edge Finder reading that is bullish, and we can hit these levels, not just with a falling knife like this, but with maybe some slower price action, maybe some rejections, I would be interested to buy. Tight stop loss, control the risk. I'm not going to go full 1% on the first position. I think I can structure it with 0.25% and just take a stab at it. Eventually, I think we're going to go back to the all-time highs, so that could be a pretty good trade idea. Okay, I think that could be a pretty interesting trade idea right there. Let's remove the drawings. Now, something I know about Elliott waves, if you follow them, is usually there's 5 waves up, and then there's the ABC correction, like this. Sorry about that. Something is wrong with my voice. So I don't think the selling is yet done. I think we have another leg lower on gold and silver. If you look at the prior pullbacks, like here, you kind of have an ABC pullback. 3 waves down, right? Here, I would also say 3 waves down. So I don't think I've almost never seen a pullback after such a large trend be just one straight leg down and then we just correct to the upside. That's why I'm kind of expecting a bit more downside, a bit more of a correction to hit some lower levels. Again, I'm looking for buy setups. I'll be getting in at the levels. Edge Finder confirmation would be awesome. If you guys want to get the Edge Finder, you can do so with my discount code, which is MARKO. Okay, so you can get it. You can also join the A1 Discord, get trade signals, trade analysis, fundamental events, breakdowns, general chat with other traders, and make sure to join us. So the recent trades I've put in are UJ buy setup and USD CAD buy setup. Euro CAD was a signal from a couple of weeks back, from I would say the 16th of September. So that's kind of my analysis for gold and silver. For the Nasdaq, I'm just looking for a pullback. So if you did catch the taco trade, congratulations. I was too slow. I wasn't even at the screen at the time, so I didn't manage to catch it. I'm waiting for the next taco trade, if I'm being honest. For those of you that don't know, taco means Trump always chickens out. So Trump does a crazy tweet, crazy post, crazy announcement, the market drops, you buy the dip, and then the markets go up. Okay, Nick managed to catch the dip as far as I saw. So he's running some pretty nice profits. I wish I was in this. It's a pretty good trade. I'm going to have to wait for the next one. I'm going to have to keep monitoring Truth Social, keep monitoring Financial Juice, and try to get in on the next dip. That's the forecast on the Nasdaq. Waiting for dips, waiting for pullbacks. I definitely want to buy. I definitely don't want to sell the Nasdaq. I don't want to sell gold. I don't want to sell silver. I told you that I'm expecting one more leg down, but it doesn't mean I'll actually sell. I'll actually get in on sell setups because I think the edge is much, much greater to just buy the dip and hold. You have a much, much bigger edge. That's why on your broker, if you're trading CFDs, it's pretty expensive to hold the buy setup, and you get paid in swaps to hold the sell setup on gold, because the brokers know that you can actually make money by buying, and you can lose a lot of money, even your whole account, by selling gold. Okay, I saw oil. US oil, let's see that. Oil has had quite a rebound to the upside. So we were falling. Then you had sanctions, Russia sanctions, US and Russia drama. Oil goes up. I'm not looking to take anything on oil. Oil is very much impacted by geopolitics, very tough to trade. You can have a solid trade idea. You can have a solid puzzle assembled. You can say you can have multiple confluences, and then you still lose the trade because there's a crazy geopolitics event. Israel and Iran, Russia and Ukraine, US and Russia, Russia sanctions. So Russia, Middle East, it's all very unstable. If there's any news, you see massive spikes, and you can get taken out for much more than you risked. So 2 things I don't like trading is copper because of this choppiness, massive swings, and oil. I think it's pretty tough to trade it. Let's see, US 10-year. It seems to be just going lower. Interesting stuff. Very interesting stuff. So this is what Trump wants. He wants to see the yields go down. So that's interesting that they're actually following and going lower. Okay. What if we get a rate cut? Well, we will definitely get rate cuts. They're pretty much priced in. 2 rate cuts still in 2025. And yeah, so we have a Fed meeting. Let me see, calendar. Next week, we have a Fed meeting. It could be a hawkish cut, meaning they cut rates, but flag inflation as being above target, which you can see right here. Let me see. See? Kind of going up overall, 3% now. Yeah. So I think we're definitely going to get the 2 rate cuts. Pretty much priced in, pretty much guaranteed. What about 2026? We will get future projections, I think, in December. So in December, we should know more about 2026. So far, we have some rate cuts even in 2026, if I'm not mistaken. Let me see. Okay, so yeah, pretty much we should expect some rate cuts in 2026, but those have not yet been priced in, as far as I can tell. Max says, I'll soon sell EuroCAD, just waiting for the breakout. If it fits your plan, if you have found good reasons to do so, definitely go ahead and follow the plan. Okay, last question. What are your views on the yen? Because my segment is soon going to be over. For the yen, what I can tell you is we have a Bank of Japan event next week. See, tentative JPY policy rate. I think because of the current clash between the new prime minister and the Bank of Japan, I don't think they're going to hike interest rates next week. So I do think the yen is overall in a downtrend, and it should respect the 20 MA, and it should continue to drop a bit more. That's the bet I have. I have a UJ long. Watch out for the intervention level. 156, 157, 158 could be a level where the Bank of Japan intervenes. I'm planning to take profits way before that level. So short term, bullish dollar, bearish yen. That's about it from me. You can catch me next week pretty much every day, and good luck in the markets. So see you. Goodbye.
If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hello, hello. How are you guys doing? Happy Friday. I hope you're all well. CPI, not great for the dollar. Rate cuts pretty much completely expected at this point. I don't really think there's any need to go into it. I'm fairly sure you guys discussed it with Chris, with Nick. So I'm not going to really go over it. But yeah, I think there's not really that much to say anyway. I'll just say it's lower inflation. Obviously, we're still not getting labor market data, but what we do have in regards to the labor market isn't great, and also based on the dot plot and the CME FedWatch tool, it's, you know, it is what it is. Ball out, Dragon, hello, hello. New Zealand US dollar is selling. Well, actually, it's not really doing anything. It's kind of just sideways, unfortunately. Sluggy, hello. So I'm going to be honest, there is nothing going on in my watch list. The only thing I'm really paying attention to is Euro CAD. We've got a bearish reading here on the edge finder of -8. We've got quite nice technicals going on here. We've got a very, very simple high to low, looking for very simple 50% retracement. Also line up kind of with the previous structure through here, and then looking for further downside. Very basic sort of bog standard bread and butter setup. But whether we get that is a different question. It might be a trade for Monday or Tuesday next week. As for open positions, I'm in the GJ still. Nothing going on. It's actually in some drawdown right now. Nothing too major. Silver has benefited. I was in profit. Then it came to drawdown pre-CPI. And then CPI has obviously pushed it into some slight profit. Nothing overly interesting. New Zealand US dollars in some drawdown. This morning I traded London. So I'm basically using gold as a hedge for my silver. So basically what my plan is, because I'm not 100% confident that the silver is just going to start rallying from here. It could, you know, we could see silver reversing and continue higher, but I am anticipating further downside. So this is just my initial entry. So if silver does continue down, it's, you know, very, very likely that gold will also continue lower. So what I'm doing is essentially just selling gold whilst long silver. And that way I can just cover any downside that my silver position does experience whilst also leveraging into more silver longs. Does that make sense? So that's all I'm doing with gold. And I also caught a euro dollar mean reversion position this morning. Again, just using VWAPs, nothing really exciting to tell you, but that's it. That's pretty much all that's going on my side. Ending the week on a quiet note. And obviously I closed out my S&P longs yesterday. Ella, hello. Any chance we can use 2 guest discounts together for a better deal? Shoals, to be honest, if you're wanting to buy something from A1, I would wait. I think next week they've got a huge discount. I'm fairly sure it's like this Cyber Monday sale or something like that. But I know there's some big discount coming pretty soon. So if you are gonna buy A1 products, I would highly suggest either doing it now and using code ELITE or waiting for the discount to come. New Zealand, oh, I already read that one. FXJ, check out aluminium ingot futures or copper wires. Well, I told you that if you're going to give me these things to look at, you're going to have to give me the ticker as well. I don't even know what to look at to find those things or what ticker to type in. Cedric, I saw your message. Didn't we answer you in Discord this morning? I swear I'm 90% sure you asked us that and we gave you the answer this morning. James, I look exactly on that Euro CAD. Fantastic, Max. Great minds think alike, right? Phantom, good afternoon. Ball out fixed Discord messages. What do you? The thing is, Ball, I looked at Discord. I did, and I didn't see anything from you. Send me another message. It might pop through. Sick making this gold situation. I like it. I think it's fantastic. I mean, gold is giving us two opportunities. Well, I don't know why I'm on this one. Hold on. Let me go over here. Gold's given two opportunities. It's given opportunities for long-term holders to take profits. It's given opportunities for bears to make some money. And now it's giving opportunities for long-term buyers to get back in at a better price or a lower price. So I think this is fantastic, because one of my complaints with gold, basically for this whole bull run, I've missed, I'm going to say, almost every opportunity. So during this period, I refused to buy it because I was making, well, I could see a bull and bear case at this point. So, and obviously it was range bound. So I just didn't see the risk reward is worthwhile, especially considering we were so close to what at the time was the all-time high. So I couldn't buy it there. Then I missed all of this again because there was just no valid pullback. I couldn't get in. So at this point, obviously, I'm now in silver, so I'm not going to also go into gold for a long-term position. But I think this is a pretty decent place to maybe look to buy. Now, again, I've been saying this basically all week and the end of last week as well. And this is the last time I'm going to mention it, likely, unless something happens. But I think this might be done. This 9-weekly bear pattern or bear situation, it's very likely over. Now, I don't want to say that for 100% certainty, but on average, it's 8 to 13% downside. We've had almost 9%. So statistically, this could be it. This could be all the downside we're going to get. And then we could continue higher. Worst case, we could come down maybe to around 3,700. And again, that would just be an opportunity, in my view, for long-term holders to accumulate some gold. So I'm completely fine with the metals having a bit of a sell-off period. Nick said there will be Black Friday sale. That's it. Yeah, Black Friday. Yeah, A1 do a fantastic discount period for. I think they combine Black Friday and Cyber Monday into one thing. I'm fairly sure, but yeah, it's a fantastic period if you are wanting to save a bit of money. My view on dollar CAD. I don't have a view on dollar CAD. Let me just double check. I don't think it's on the Edge Finder, is it? No. So I was looking at dollar CAD last week and into this week, but I had to scrap it because it fell off the Edge Finder. That's my simple sort of rule set. The technicals looked fine. So I was looking, obviously, we've got a very nice bullish trend. Fib from low to high. We had a rejection off the fib zone, came into previous support here as well. So technically, it was a great setup. And there is an argument to say you could still get in at this point. But the simple rule I have is I kind of, how do I explain this properly? So I've kind of got two approaches to swing trading. In a situation like with dollar CAD, where I might not have a full economic thesis, like sometimes I'll go into a lot of detail on a trade. I'll look into every aspect of the economy and I'll build a longer term idea. In that case, I will generally just sort of do my own thing. But in a case like dollar CAD, where I'm not that interested, I'm not overly bullish, I'm not overly bearish on the dollar, Canadian dollar, I'm not really that interested in either. Then I'll go to the Edge Finder, and that will be my compass. But in this case, I don't have that, so this trade is completely scrapped because I also don't have any interest in doing a deep dive on dollar CAD to try and justify any sort of trading. So to answer your question, I would expect continued upside just looking at the trend, but overall, I'm not willing to put any money on the line on that market. Sending you a message is bouncing back. Interesting. If you've got Twitter or Telegram, message me on there. Gold rise without reasons, month and everything depending on CPI. Give me a break. I wouldn't say it's rising because of no reason. I mean, I would argue there's quite a lot of reasons gold's rising. The US debt just reached an all-time high. I think yesterday it was all over Twitter. I think it's 35 trillion now. If you look at the US dollar to gold ratio on the debt calendar thing or whatever it is, gold is justified to continue higher, and the price is justified. I think the main case for the main case for gold in terms of its price is more its price in relation to sort of the price indicators. So it's what you would consider fair values. So like the moving averages, Bollinger Bands, those types of things are and RSI as well, are all indicating very overbought conditions, but they are just indicators and they just react to what price is doing. So there's nothing saying that gold shouldn't be where it is fundamentally. How am I feeling today? I'm feeling like a pretty bullish candle today. I'm feeling good. It's Friday, coming up to the end of the month, done quite well. So yeah, I'm fine. How are you? Why I'm in the dark? I got this question yesterday as well. I'm not in the dark. I've actually got a lamp on right over there, but it looks like I'm in the dark because it's the way I set up my my office area intentionally, because I wanted my video quality and like YouTube videos and short form content to just look a bit better, just be a bit more visually appealing. So I just made it look, or tried at least, to make it look a little bit more cinematic, I guess. Not sure if it's accomplished the job, but I quite like it. Can you please share your opinion about Bitcoin? I don't think I've really got anything on Bitcoin either, unfortunately. It's still kind of hanging around where it was yesterday. So yesterday we were looking at the support level here, 200 moving average, and obviously the wicks that we're seeing to the downside. So just from basic technicals, it looks like it could continue higher. But the reason I wasn't interested is because of this H4. So it's continuing to fail. It's continuing to fail. Hold on. It's failing to break higher. That's what I'm trying to say. So obviously we had the US, the US and China tariff situation last Friday. Most markets sort of corrected that move. It wasn't like, obviously we had the spike, but it wasn't a big deal. Like the S&P, Nasdaq, they all had the spike and then corrected, and happy days continuing. Bitcoin hasn't done that. We've actually created lower highs, failed to break higher, and we keep testing these moving averages and coming lower. So that's what I'm saying. The H4 to me is very bearish, and I would actually like to sell this just based on the H4. But then I go to the daily, and the daily is looking relatively bullish, like it's finding support. So mixed signals on Bitcoin for me. And as I always say, it's not a market I trade. So my knowledge really on its behavior and its sort of day-to-day drives is very limited. So I'm not going to try and over-explain it. Can you please explain the probability relationship between COT non-commercial positions and the index price? Based on my analysis over the past 5 years of data, I found the correlation 48. The index, what do you mean the index price? Between COT non-commercial position? I'm not 100% sure what you're actually asking there. I kind of get what you're saying, but I need to know what you mean by the index price. Look at China gold. I know I tweeted that. Oh no, sorry, I didn't tweet it. I put it on my Instagram this morning. Hold on, let me pull it up because you guys might find it interesting. But unfortunately, I didn't save the images, so I'm gonna have to pull it up on my Instagram. I guess it's a slight plug for myself. Just bear with me for a second. So here, let me pause that. Chinese premiums flip positive. So essentially what this is saying is that Chinese buyers, domestic buyers in China, are paying over the market rate of the global benchmark for gold. So that tells us, for silver, this is silver. So that tells us that there's a high demand in China, high demand for silver in China. And that can lead to lower supplies, meaning they have to import foreign silver, which can lower the supply, obviously, globally. We've got a similar thing here. So gold warrants at record highs. This marks 28-fold increase since 2024, signaling an unprecedented surge in gold purchases by Chinese investors. So far this year, Shanghai gold warrants have surged 570%. China's gold purchases are unprecedented. So, yeah, I mean, I don't think there's any question that the metals are very, very, very likely to continue higher. over time. You know, we might have these short-term pullbacks and profit-taking periods, but I don't think it's cause for concern. I don't think it's a case of, you know, silver's going back to 1900 or 1000 or anything crazy. I think it's just the natural dynamics of markets. People, you know, buy, they want to get their money back, so they take the profits. It's just the way it works. And then we did have some slight risk on news as well, obviously with Trump and China. So there was a couple of different factors for that move, but it wasn't a fundamental shift in my view. You just need to start the stream with a slow chair spin. Oh yeah, I should have the cat on my lap as well, so like I'm in a evil person's cave. The main case is manipulation, which cost me 80K. I don't like the word manipulation. I'm happy to say you get manipulation on low liquidity assets, you know, penny stocks and meme coins and those types of things, because it's very easy to manipulate those, because all you need is maybe tens of thousands, maybe even less on certain things to move price. But with things like Bitcoin, gold, silver, main markets or major markets, it's very difficult, really, unless you've got billions, which obviously we don't, or at least you guys don't. I do. I kid you not, just walked into an elevator and a lady was crying to her colleague about finances and how she can't keep up with the absolute minimum house budget. Yeah, I mean, I think a lot of people in the West are struggling. In fact, I'd say it's a global problem. A lot of people are struggling these days. Pound New Zealand. Sorry, just give me 1 second. I just need to see if I'm the last guest on today, because I don't want to run into someone else's time. I'm kind of just yapping today. I am. Okay. What was it? Pound New Zealand. I'm going to be honest. Although it does look quite bullish, technically. Obviously, we've got a really nice pull off this 200. Looks like we might be getting some buyers in, but I really don't want to hold pounds or sterling. I think the pound is in, or the UK, I should say, is in a very tricky spot. Their spending is, for lack of better terms, out of control. The government is spending money like crazy. We had data, I can't remember what it actually was. We had data, was it yesterday or the day before, that also wasn't great for the UK. Again, I can't remember what it was off the top of my head. CPI came in lower. So yeah, I wouldn't be interested in holding pounds. But again, if you are just technical trading, you don't care about the fundamentals, there is an argument to be a buyer. Again, bullish trend, pull off this 200, simple. Oh, we had news. Oh, my bad. Hold on. So CPI, we had PMI. So manufacturing PMI. Oh, actually, very good. 52.2, higher than forecast by 0.2. Still showing a bit of expansion. Services PMI also did very well, actually, 55.2. So let's have a look at the dollar. Yeah, dollar's obviously up off the back of that. So CPI drove it down, and we've got PMI pulling it back up. So it's kind of just a seesaw move. But this is only the 15-minute time frame, so definitely not a large market move today. Got Tory Trades crying on your Instagram. No, it wasn't. I'm going to be honest. I put her face on there because, it was, I used like 5 seconds of her video, but I used her face as like the cover of the reel, obviously for clickbait, because she gets more views than I do. But no, it wasn't a hateful video. I was sort of just replying to something she said or making my own point on top of what she said. Definitely wasn't an attack on her. You guys aren't bullish enough on gold and silver. Well, I've got my position on silver. I'm not sure how much more bullish I could get without over risking or over exposing myself to metals. I do hold some gold in a investment account. I don't hold anything physical, but I do have golds as in long-term positions. Penny stocks are liquid. Yes, that's true. How's Euro pound looking? Euro pound was bullish. Let's just see. Sorry, bearish. Yeah, nothing there. I'm struggling to make a case for Euro pound because I'm now conflicted. Again, I think the UK is in trouble. So I wouldn't really want to short euros against pounds, but I could see a mean reversion coming for this market for a couple of different reasons. We've got obviously highs here. This market is prone to mean reversions. Obviously, it's very correlated. The two currencies are very correlated, and that is, you know, similar to the Aussie New Zealand in terms of it really just kind of moves sideways. So I wouldn't want to be a buyer, but I also wouldn't want to be a seller. So it puts me in a difficult position because I could see it going lower. Fundamentally, though, I could kind of justify higher prices on euro pound. So either way, I'm kind of stuck in the middle. I feel like this week, all I've really said is, you know, up or down. I don't feel like I've really given you that much information, but I'm doing the best I can at the minute. There's just not really that much going on, in my view anyway. I think gold will be green today. Very possible, yeah. Which investment? Broker. I've got two. So I use Interactive Brokers for options and some smaller investments. And I use Trading 212 on a ISA account. So it's tax-free in the UK anyway. So I use both of those. What do you think about COT? Non-commercial positions are correlated. I'm not sure. I get what you're asking, but I don't know what you mean by correlated. Do you mean when they're buying, how much do the indexes go up? Is that what you're basically saying? If so, I've got no idea. I could not tell you. I'm sorry. Have you analyzed gold and NAS? We've done gold, yes. I'm not going to do gold again because I'm running out of time. If you want gold, just feel free to backpedal or skip back. What else did you say? Nasdaq. Yeah, so I'm a little bit cheesed because obviously I closed my S&P position yesterday ahead of CPI, but clearly that was the wrong decision. So I'm sure Nick's smiling. I'm not sure if you guys follow Nick on Instagram, but he put a picture up a couple of days ago saying that, you know, went to work and lost 15,000. I thought that was quite funny, but I'm sure that's definitely not the story today. Anyway, I think the indexes or the indices markets are completely justified to go higher. So although you definitely could make the argument that, yes, they might be a little bit stretched, they might be what you might consider overbought, but, you know, what would justify them going lower? I don't think there's really anything. I mean, we've got rate cuts coming. We've just had lower inflation. There is no news is good news, seems to be the theme in terms of the government shutdown. So, you know, just ride the wave, I would say. That's not financial advice, of course, but if you find opportunities, I would be very understanding of buyers. You think we'll see a 20 to 30% correction on gold before we go higher? The quants just arrived. The cat. 20-30% correction on gold. I would say it's unlikely, but it's obviously not impossible. Just go short and long simultaneously. Take loss, stop profit. Yeah. Sounds like a solid strategy. German 30. I'm going to be honest, I don't really pay much attention to the DAX these days. But it doesn't seem like there's anything here higher time frame wise. 30 minutes, daily, weekly. It just seems sideways, to be honest. I don't see anything. I mean, this weekly has been sideways for how long has this been? 140 days or 20 weekly candles. This has just been sideways. So automatically that just puts me off. Of course, the DAX is great for scalping and breakouts and things, but for swing trades, I see absolutely nothing there. If you don't hold it, you don't own it. I'm not bothered. As long as I make money off it, I don't care if it's, you know, physically owned or digitally owned or not owning it whatsoever. I like to stay as liquid as possible. So I'm not really interested in having physical investments. I like to have things, you know, if anything happens, I can sell the position or sell whatever it may be, get the money, and it'll be in my bank account within 72 hours. Thanks, bro. German 30, just scaling it. Not sure what you mean, but that's cool. As long as you're making money. So I don't think there's really anything to end the week with. Normally we might have a look at COT positioning, but obviously we're not getting that. There is nothing we can really break down. Again, with the US specifically, we're not getting the data there. So what we did have was CPI. We also had services and manufacturing, which doesn't seem to have updated yet on the Edge Finder. I think no, not yet. So inflation lower, it does justify rate cuts. Services and manufacturing did signal expansion within, obviously, well, expansion within manufacturing services, which is good. Both positive signs for the US. So I would expect, same narrative. Rate cuts are definitely on the table, in my opinion. It's now just a case of, obviously, as I've been saying for the past 2 weeks, waiting for the government to reopen so we can get that data regarding the labor market. Physical holding things as a disease, need to be liquid and moneymaker. I don't know. I'd say it depends on what level you're on. I don't think I'm financially at the level to justify holding tens of thousands in something that I can't quickly get rid of if I need to. But if you're a multi-millionaire, obviously, holding a 50,000 in some metals physically, it's not really going to bother you too much, I would assume. But yeah, I want to get a safe filled with gold so I can feel like a mafia boss. Safe filled with gold. Yeah, that'd be pretty cool, wouldn't it? What did Nick lose money at? No, it was I don't know. It was just it was an Instagram post. I thought it was quite funny. I'm not sure exactly the details. German 30 on a buy entry, but it doesn't want to go up like US 30. I mean, they're not correlated, so it doesn't, just because they've got 30 in the name, it doesn't mean the US 30 goes up and the DAX goes up as well. Okay, so let's just do a quick check. Seems like silver's having a little pullback here, which is quite nice. It'll be interesting to see if we can get a continuation higher. Either way, I'll be scaling in. If we can break past yesterday's daily candle, I will likely add in another long position. However, if we start breaking lower, I'll probably look to enter another position towards 46 and just scale in. Pound yen, I can't really do anything with this yet. I'm not going to scale in whilst it's in drawdown. Again, it's a negative swap position, so the longer I hold this in drawdown specifically, the higher risk it becomes. So obviously, if I'm in drawdown, the probability of it hitting stop loss increases. And I'm paying swaps, so it's just a net negative position at that point. But if we can come back into profit, then maybe I will look to add in a position. New Zealand US dollar, I'm not going to scale into this one until we can reach 0.58. If we reach there, I'll add in again. But until then, there's nothing to do. So that's the plan. That's my playbook. There is no other open positions, so that's it. Do I trade bonds? No, I do not. How to learn fundamental analysis like you? That's a good question. It depends. There's different ways. You could get a mentor. You could join A1 Trading. You could join Elite Traders. You can go onto YouTube. A good way actually is Udemy. So there's a lot of, I think, you can get one for maybe $15, $20, and like an economics course. You will likely have to apply your trading knowledge, because I got one a while ago, and it was obviously just economic. It wasn't trading related. It was economics purely. Does that make sense? So it was like, how is GDP calculated? Obviously, that's not applying to trading, but GDP is relevant. So then you've got to take it and fit it into trading. That's one way to do it, and they're very good courses, actually, generally speaking. Do I trade dollars out? No, I don't. 30 is so weird. Why is it the top 30? It's a good question, actually. I'm not sure. I'm sure there's a story. I know it used to be oh no, sorry, it used to be DAX 30, then it changed to DAX 40, didn't it? Or is it the other way around? I know it used to, I can't remember which way. I'm fairly sure it's DAX 40 now, though, isn't it? Shill says it's cheap too. Yeah. Oh, wait, hold on. I've just remembered the A1 guys, actually, I'm fairly sure they have free stuff on their website. I'm going to end the stream in a minute, or I'm going to leave because I'm at my time. But I'm fairly sure. Yeah, if you go to hold on. Yeah, here. So there you go. A1 guys. A1 trading. a1trading.com, go to courses, go to fundamental analysis course. It's free, and then you can start all these lessons. I would honestly start there, to be honest. To be transparent, I haven't watched any of them, but I would assume that they're very good. So guys, I'm going to see you. I'll love you and leave you. Have a great rest of your day. Enjoy your weekend. Stay safe. Don't get margin called. And I'll see you next week.
You've been watching A1 Trading Live. We're here Monday through Friday, where you can tune in to hear insights from professional traders from all over the world. Make sure to subscribe for future streams. And as a reminder, if you're looking to get access to free courses, prop firm discounts, and free trading tools, head over to a1trading.com. See you next time.